Alright, so I'm going to review the YM, which is the index futures, and I'm going to use the charts you see. The top chart is a Renko chart, bottom is a Renko chart, the top is a 25 brick, and the bottom is a 10 brick. Oh boy, top should be more. I'm going to make it a 5 brick. Anyway, I'll do that later. So let's take a look at what's going on here and trying to understand it. Now, it really doesn't matter what type of chart you use. You could use. They all have their pros and cons. They all have benefits, and it really is up to the trader to see which one his edge is easiestly spotted on. So I like after looking at Renko, I prefer it because it takes out a lot of the randomness. Prices either going higher or lower, and everything in between is a lot of useless bars. There's bars just being printed. I'm not really looking for that. I want to see rallies, and I want to see reactions, and I want to see clean trend. And for me, the Renko chart does the best. So what you see here is the market went down to an oversold condition where it says OS. At the bottom here there was an oversold condition, and you can see the number of bricks: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. All this really means is the market moved too far, too fast, outside the Keltner channel, the 2 standard deviation, not the 2 ATR, significantly, and then from that oversold position, there was a 5 brick rally. 1, 2, 3. 1, 2, 3, 4, 5. So, and then you have this pullback here, and all of a sudden it made a higher high. Now let's take a look at the volume action here as well. We're going to start noticing that this rally has a heavy volume brick in it. Alright, that's the first evidence of heavy volume coming inside this particular brick. On the rally, and we noticed that it took out the prior high volume brick on the left hand side in the rally down. So you see that you have this brick over here, it has high volume, and you have this brick over here, it also has high volume, and this high volume brick takes out the prior high volume reaction brick. This is important, and it has follow through. Now Renko is not used with volume or wicks, but use it. There's no law against saying you can't use it. So I like it. Now, so this is an indication of high volume. Now we want to take a look at the pullback, and we want to see a higher high. Remember, in Wyckoff's first study, in his first study, what he looks for is in the downtrend is he basically looks at a rally, and he's looking for a higher high. That higher high served as some type of confirmation. Now there were more indications in his first study, like volume off the bottom, heavy buying and all of that. So one of the things that we're going to be looking for is a higher high, and we see that establish. This wave, this second wave, is absolutely critical, because the reason is you have buyers on the pullback right there. So you had this rally, there were buyers in this rally, you had price go back down, and buyers stepped in. Alright, they stepped in on the pullback and took price higher. So this is a bullish indication This is not a bearish indication. This is a very bullish indication. So far we see two bullish indications. The first is it makes a higher high. And the second is after the reaction low, heavy volume came in. Alright, heavy volume came in. And what that means is that the buyers came in. Now, one of the third things you want to see that makes you ponder if this is still bearish is you see over here, it seems like the sellers came in on to sell this rally, right? So over here, you're taking a look at this and think, hey, wait a second, maybe I should sell it also, right? Because it goes up and then you have high volume right after the rally. What does that mean? That means they're selling the rally, right? So as they sell the rally, it comes down to this level. Buyers step in and the buyers take out their selling. The buyers take out all of this selling. These guys sold, or I don't know what they did, but they did something over here. And it seems like it's selling because it has follow through and comes back down to test the low bar. When it does that, buyers stepped in and they were able to take out these sellers up here by making a higher high. So now what are the bullish indications we have? We have the fact that A, made a higher high, B, buyers came in buying the pullback, C, buyers took out the heavy volume selling. Alright, so that's three indications that you have already. Now what happens is you have, from this area, you have a selling attempt. Alright, so supply is going to try again. And guess what? You had all of this volume, all of this juice right here, and what did it do? It did nothing. It did absolutely nothing. In fact, price reversed and made a new high. Now, look at the bullish indications. First, price makes a higher high. Second, buyers step in on the pullback as indicated by this high volume. Third, prior selling attempt was taken out. Fourth, another attempt, a high volume attempt, was unable to go lower. So either they're selling and their selling failed, or buyers are stepping in on the pullback, on this attempted pullback. Either way, it means that the ease of movement is to the upside. It means the trend is in effect and sellers have failed to take price lower. This right here means that sellers have failed to take price lower. Someone may also call this effort reward. You know, all of this effort and no follow through, no reward. At least in the prior case, you had some reward, right? You have selling, follow through. Now you have selling, no follow through, and in fact a reversal and a 4-brick rally. At this point, the judgment of a trader or tape reader is that the bulls are totally in control. Get ready to buy pullbacks. And this was your pullback. Alright? That right there was your pullback opportunity, and that right there is where the trade can be established. Why? Because supply failed. That's why. Okay? Either supply failed or this is high volume accumulation on this pullback right here. Buyers stepping in. Whatever the case, the logic dictates that buyers are in control. And this is why we were able to have this rally. So let's continue to see this rally. Alright, so rally makes a higher high. This high volume is also very important. So low volume after that pulls back, right? And there is a low volume. I think that's low volume. There's low volume on this brick. This is your low volume pullback opportunity to get long. And guess what? Buyers step in again. As you can see, look look at the spot that the buyers are stepping in. They are stepping in on pullbacks. That's how smart traders are going to do. That's what they're going to do. You see here, they bought here on a pullback. All right, then now they're buying here on a pullback. Right there. You see that? That high volume is indicating interest to go long. Alright, so we have, taking a look at this trend, we realize that buyers are coming in, buying the pullback, takes it higher. Sellers are tempting or whatever, but buyers are not going to let this price go down. They reaccumulate or do whatever they do. Sellers can sell, but buyers will happily take that and take price higher. Comes back down on the low volume test, retest, bang. Buyers come in right there and take price higher. Alright, so they take price they take price higher until it goes up. And now, would you exit here after this reversal brick? This is a question. So far, you see that the lowest rally here has 1, 2, 3, 4, 5 bricks. The highest rally here has 1, 2, 3, 4, 5, 6 bricks. Alright, 6 bricks, and is the biggest up wave in terms of length. 1, 2, 3, 4, 5, 6 versus 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4, 5. Now, what is that telling you? It's the biggest up wave, and you're getting high volume here. If they're gonna sell, this perhaps is a spot to at least get a pullback, right? So this is how you determine, alright, maybe I should get out because we've had multiple waves up, and this is the biggest wave out of all the other waves. Alright? In other words, a climax. So what are some of the indications that will make you think of getting out? One, it's the biggest wave out of all the other waves. After multiple waves, you get the biggest wave. It goes out of the Keltner channel. You have 2 bricks that are outside the Keltner channel, and that's not on 1, 2, 3, 4, 5, 6 bricks. Alright, that'll make you think. The highest brick there has very low volume. The highest brick has L. L is low volume, H is high volume, low volume. Is there a lot of interest to continue buying at the top? No. After that low volume, you have high volume. So is it possible that someone is selling the highs? You're damn right. It's possible. Because that's what they're doing. And then you have this reversal break right here on high volume, right? But don't think it's bullish, because even though it's green, it has no follow through. So is it possible that as buyers are stepping in, sellers are selling to them, creating high volume, meaning buyers are coming in, but sellers are selling? Yeah, that's what's going on. And this is evidenced by the next brick, which is also high volume, which means that after this low volume appeared, sellers appeared. As the price tried to go higher, sellers kept selling here, and they kept selling here. So this high volume multi-brick formation over here, I don't know what the hell to call it, but they're basically selling the highs, aka distributing. Why? It's The market is in a downtrend on the higher time frames. On the daily, it's also pulling back, and you have multiple waves up that goes into quote-unquote overbought condition. If you draw a channel, I don't know how it will look, but I don't really like to draw stuff. Maybe something like this, or like this. I think that's it. I don't know. The Keltner channel, which automatically draws it for you, is not exactly a trend line, but you could tell by it that it's at the top, above the top, closing well above, and the number of bars are significant, and the behavior that tells you to get out, the price volume behavior that tries to get out, is actually here, the high volume here. This is why volume is so fucking important, because it exposes behavior. If you didn't have volume, you just have a green, red, what the fuck? It's just a brick it's just a brick, but you're not seeing the interest of the buyers and sellers. You see, over here, the buyers are interested in buying. Over here, the buyers are interested in buying. In these levels, the sellers are interested in selling. They're interested in selling. You want to see what you go beyond the head and shoulder and all that, and see what the buyers and sellers are trying to do. Meaning, what Wyckoff called this, he said, forget about accidental formations and try to identify the motives of the CM, or the motives of the buyers and sellers, or the motives of those who want to take price higher or lower. And it is very clear: high volume, high volume, high volume, unable to go higher. What are they doing? Selling. And then what happens from that area? You have a big selling wave. How many bricks? 1, 2, 3, 4, 5, 6. You have 6 bricks down. Yeah? 6 bricks down to the support level. Right? And you had high volume come in. And this is, how much is this? This is 9658. And guess what? It was able to do nothing. What does that mean? It means that it could be a couple of things. One of which is, you can try to buy at support, but the sellers will see people's buying as an opportunity to offload. So, they sold up here, went down, buyers stepping in, want to buy support, and the sellers are saying, okay, you want to buy support? Let me sell it to you. So this high volume indication here is not bullish. Why? No follow through. Instead, you get an immediate down brick. And now what's interesting is you get a retest that fails, and you get this brick, and look at the volume on it. It means that as buyers bought here, they was selling. As it came up, guess what? They sold some more. They sold some more. This is heavy selling. Look at the volume here in this brick. Look at that volume. Now tell me, who's in control? We see that the dominant trend is down, and the down rallies are bigger than the up rallies, so obviously the trend is down, or the seller's in control. Demand. Is there any evidence of any ability to rally? It's one brick. 5, 6 bricks down, 1 brick up. And then it tries again. It fails. Whenever they're trying, the sellers are selling into it. try again. Sellers sold into it. Bang, right there. You know? So we'll see what happens. Maybe buyers will step in again tomorrow morning, maybe. Maybe they'll take it up and do a stop run. I don't know. But here's what I do know. At this time, there's no evidence that demand is in control. And the evidence favors the sellers because, I don't know, because there's more selling than buying. And that's visible on the chart. All right, so now again, you can use different types of charts to see this. In fact, even point and figure with the volume is also bar charts, but yeah, bar charts are fine as well. You want to take a look at the waves though. That will accumulate the volume in multiple bars. So something like the Weiss wave, that will be helpful to see the true strength of the buying and selling in waves. Anyway, so now we're at a point where it's night and I have no idea. I don't want to try to read this because you don't really know what's going to happen in a few hours during different sessions. But I wanted to identify how did this trend begin. It began with a 1, 2, 3, 4, 5 bar rally that took out a high volume area, and it made a higher high with interest from buyers who bought after the pullback, as indicated by this high volume green brick. And supply failed when it attempted to go down on heavy volume, and instead, because of effort reward, because they tried to sell and had no follow through, there was a reversal. This action together painted a very bullish picture. That's how the uptrend started. How did it end? It ended on a climax that ended on the biggest up wave in the trend, with 1, 2, 3, 4, 5, 6 bars that went into an overbought area and climaxed. That's one way it ended. It also, from that overbought position, encountered sellings, as evidenced by sellers who were selling at the top here, right up here, and the trend broke after a change of behavior or sign of weakness, which came in the form of 1, 2, 3, 4, 5, 6 bricks down. As you can see, the sign of strength has 1, 2, 3, 4, 5. This, similarly, sign of weakness is also big multi-brick wave, 1, 2, 3, 4, 5, 6 brick wave, and demand was unable to rally, and supply came in and pressured it lower, below this initial support level, indicating that supply right now is in control.